Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, July 29th, 2014. You're looking at a daily chart of the SPY. So at the end of today, you had a little bit of a sell-off. Let's take a look at the intraday chart and see what I'm talking about. And today, at about 2 o'clock, you started a downward trend, and it basically closed on the low of the day, and actually thought during the day that we'd get down to this double bottom if we kept selling off, but that didn't happen. So let's just look at the hourly chart, and then I want to talk about a couple of possibilities for tomorrow and the next day, and then even Friday after that. So now the market looks weak. Now you're below all the moving averages on the 60-minute chart, which is the hourly chart. And now the market looks vulnerable. However, you know how from time to time I always mention that the market is there to trick us. Okay, the objective of the market is to trick us into believing it's doing one thing and then it does something else. Well, tomorrow you have two things going on. You have in the morning at 8:30, you're going to get some GDP numbers. Now, the market will react normally to GDP numbers, but remember, you're looking backwards at a number that happened in the second quarter. Okay, so it happened from April, May, and June. Okay, the GDP from April, May, and June, which incidentally, sometime in the future will get revised. So the number that they're going to give you tomorrow, A, is from April, May, and June, and B is wrong, okay, because it's always revised. So nevertheless, again, the market's based on emotion, so the market will react to that number regardless of what it is. Good or bad, it's going to react. Then, and then it'll simmer down, okay, after, if the market reacts early on, even at the open, sometimes it just reacts before the open and then it settles out. But if the market reacts at the open, because it's good or bad, either way, okay, it will typically react for about less than an hour, and then it'll settle in, okay, and then between about 10:30 and 2 o'clock tomorrow, nothing will happen. And then 2 o'clock, you'll have the FOMC minutes released, or not the minutes, but you'll have the FOMC policy statement from their two-day meeting that happened today and tomorrow. And then what happens from there is, again, we'll react. The market will whip around. It'll go up. It'll go down. Absolutely will go both ways following the announcement. They'll try and interpret the announcement. They'll look at the words. They'll look at the statement. They'll parse the words. Are they going to taper 10 billion? What are they saying about inflation and this, that, and the other thing? And gold will whip around. And that'll last about 15 or 20 minutes tops. And then that'll be over. And if the market is headed downward, it could go down farther. If the market is headed upwards following the statement, it could certainly begin to make a new high. We're not that far away. Remember, all we have to do is get back to here, and if we get back there, we'll pierce the 2,000 on the S&P, and I think that'll be that. And that could take us into Thursday, and then from there, we'll see what happens. But so those are the two possibilities for tomorrow. I have no idea what's going to happen because it's all predicated on what the emotions are following the statements and what the market, which way it's going. If it's going up, it's going to continue up. If it's going down, you'll get some buy the dippers come in, or you could get a big down day. We'll see what happens. It's up in the air, but that's the expectation for tomorrow. Other than that, let's go back to the daily chart of the spider and let's see what we've got. So we had a little bit of a down day today, and you can see there's a pattern developing here, right? We're kind of trending upwards, but we keep kind of pulling back to a certain area. So I want to draw a line in and show you, because now there's two ways that we can actually tell when the market's going to break, okay? The first way is the low that I kept talking about here from the 17th, which is at 195.43. If we break that low convincingly, I think we scale downward. Here, let me get rid of this line here, and I'm going to make this a little thicker just so you can see it better. We'll go to line properties. We'll change the color to something you can see better, make it thicker, and boom, here we go. Okay, so the one idea is if the market breaks this low. The second is you see this trend line developing. The market comes down to the trend line, goes up, comes down to the trend line, goes up, comes down to the trend line, goes up. So it's not that I'm drawing in a trend line. actually the market drew this trend line. So every time it gets to this area, it likes to bounce up. Now, guess what? We're at that point again, okay? You can see that if we bounce up off this trend line, let's say we hit it tomorrow and bounce up, my bet would be we're going to make a new high, okay? But if we break this trend line, my bet is we start downward, and then we'll talk about numbers when we get there. But that's the playbook for the next day or so. I think we'll have a really, really good indication tomorrow what's in store for the next couple of days and what our expectations should be. So that's basically what I wanted to cover in the SPY. Now I want to jump over to the FDX, which is FedEx, okay, because I let the cat out of the bag last night that this was a trade I gave to the members, but I gave it to the members up here at 153 and change, okay? And you see we've scaled down every day, and today we kind of made a stopping point at the 50-day or 50-period moving average, and I still think there's some more downside before I'm willing to take off the first portion of the trade. And then what I will advise members to do is put at least a break-even stop. We'll take half off the table, so we'll pocket the profit. We'll put a break-even stop, therefore it becomes a guaranteed winning trade. Okay, that's the way we play them all. And then what happens is I will trail the stop down as if the market continues downward. So therefore, if we ever get a sharp rally back up, we're out with a guaranteed profit. And also, if the market continues to scale downward this way, we'll just trail our stop behind it, and eventually we'll get stopped out at some number when the market rallies, but we'll have made a nice big profit. And that's the way you manage money while trading. Remember, trading or investing is a business. It's the business of your own money. Look at the blog post tonight. I go into depth about the business of your own money. It's an interesting blog post. It's all about the reasons why people aren't successful trading, and looking how we should look at trading or investing, which is as a business. So go ahead and read the blog post. It's interesting reading. It's a good one tonight. Now, since we're in the middle of earnings season, we did have a lot of earnings after hours, as we typically do every day during earnings season, at least the front portion of earnings season. So tonight we had Twitter, and I just want to bring that up because, well, actually on this chart here, on this platform, I don't have... well, yeah, I do. Okay. I was afraid I didn't have the after hours quote, but here we go. So we're all the way up at $50, okay? 49.85. We're at, for all intents and purposes, we're at $50, and I don't know how much higher it'll go tomorrow in the morning. I don't see it getting much into $50. I mean, I don't think it could get over 51 tomorrow. So I would look for a pullback if we get to the 51 area, right? There's a lot of resistance right in here, okay? So don't look for it to get much. In fact, let's look at a longer term chart and just to see if we see any more evidence that 50 might be a good number. Okay, yeah, this 51 right here, this pivot high is a good number at 50.94. Okay, so you might have another dollar in this thing in the morning when it opens up. It's going to shoot up. But what you'll have is you'll have a lot of internet or social media related companies that get pulled up in the morning with this stock. But keep in mind, you have other ones that are falling. You had like Buffalo Wild Wings is selling off, and I think I saw another one, but I don't remember. So you're going to have it both ways, but we'll see. GDP is going to be more important than the earnings tomorrow, as is the FOMC policy statement in the afternoon. But nevertheless, I just wanted to point out that you're going to have a wild one in Twitter tomorrow. So if those of you that are interested in playing on the short side of Twitter, if you wanted to do that, okay, I would wait for around 51. Okay, you might even get a Pierce of 51. And if you get a Pierce of 51, I would short it, and I would just give myself $1 wiggle room on the downside. Meaning, if it went to 52 or over, that's where I would use my stop, and then I would let it ride, because when the market cracks, even if it's in a few days, okay, Twitter's going to settle back down, and then it's going to go right back where it came from. This is a one-day wonder. You can almost guarantee that it's a one-day wonder. Even if it's not, it's going to go up tomorrow, and if it stays up, it'll consolidate for a few days after that, so it'll pull back a few dollars. It's just the way it works, folks. It's not going to go up and continue up all the way to $60 or $70. It doesn't work like that. There's a lot of sellers that are going to show up at $50, guaranteed. It's a big round number, and I don't even know if you'll get to 51, but it's possible early. So like 9:30, 9:31, you might see a 51 print, but by 9:33 or 4, you might be back at at 48. It's one of those stocks. Anyway, I think we're going to put a wrap there tonight. I'm David Frost, mystrategicforecast.com. This was Common Sense, Technical, and Market Analysis. Thanks for tuning in, folks.